Hello everyone, this is today's video analysis for March 1st, 2019. Today we're looking at the GBPUSD Greater British Pound versus the US dollar for today's trade analysis. Starting here on the daily time frame, we can see that the currency pair has been in an uptrend for the past couple of weeks. So look along the blue trend line. We started all the way back here at the bottom of the blue trend line into February 14. So about 2.5 weeks ago, 2 weeks ago, we saw the market bottom out and start moving higher. It's been pretty aggressive upward trend here for this currency pair. I saw some hesitation right around the mid 1.3035.60 level, the purple shaded area here, hesitation there, and then it's been moving higher, making new highs, breaking through and breaching through this orange zone, which was 32.40.10, which historically has been resistance. Look at all three of the black circles over here on the left-hand side, or three circles. The green one far left, resistance into the orange zone and fell down. Then the black circle fell down, and this black circle fell down. So we see something new. It's a change in the status quo for the currency pair. 32.10, 1.3240 is that orange zone where historically we have been resistance. We're now seeing support into there after the breakout. So what we're looking for, now that we've broken that orange zone, is if the market's going to continue to go up, this becomes a jumping off point for buyers, buying on dips into support, buying at a lower price. Remember, if you want to buy anything, doesn't matter what you're buying, currency pairs, used cars, candy bars, really doesn't matter what you're buying. You want to buy something when it goes on sale. You want to buy it at a lower price. And that's what we have now. As the market's been going up to new higher prices, it's gone on sale. It's gone down to a lower price. It's temporarily on sale, and you can buy it at a cheaper price, 32.40.10. So if you're going to do it, this becomes the spot to do it. Your risk then is limited to the break underneath that orange shaded area, 32.10. So you don't want to do that. If you buy here, you don't want it to get lower. You want to buy, you want to target the highs and higher from there. Now, if you're looking for a short or a sell on this currency pair, if you're looking for the pound to break support and go lower, if you're looking for reversal for the GBP, or you're looking for a stronger US dollar, then you would look for the breakout under the orange zone. Now, I don't think you want to sell on top of it, but a break underneath it would be your opportunity to go short. But the trend is clearly up, and I don't think we want to fight that trend at the moment. So it's more likely we're long into the orange shaded area, 32.40. Zooming in a little bit, it doesn't really change it. It just gives us a better view of what's happening between the pink and the orange zone. Obviously, orange zone 32.40.10 is the support. The pink zone 1.3290, 33.20 is resistance. And of course, if at any point we look for a break above the pink zone, we look for new highs and the continuation of the trend for the pound dollar. Let's take it down to the 4-hour time frame. So as we get down here to the 4-hour time frame, again, it doesn't change it. It just gives us a different perspective, doesn't it? We saw the breakout here, new high, dip into support. We saw a similar scenario back here where it dipped into support at the green zone and then bounced back up. So that's what we're looking for today. We're looking for that infusion of buyers right here into the 1.3240 level, and then we can look for it to continue to move higher. Risk, again, not very hard to see. We just don't want it to break underneath this orange zone. So if we do buy the orange zone, our stop loss will be underneath. How far underneath will depend on your own personal risk appetite and risk tolerance for your trading account, but underneath the orange zone is the risk here. So the closer you can buy to the orange zone, the smaller your risk would be. Just think if you would have done that down here at the green zone, if you put your stop loss under the green zone, it was safe, and you would be in significant profit if you did that. So nice opportunity on a dip into support today here for the pound dollar. As long as it doesn't break through there, I think we're okay. Fibonacci, I don't think really it's going to give us a lot of benefit. Let's actually take fib from this low to this high right here. We do see, well, that's interesting, the 382 Fibonacci retracement level sitting at 1.3204, just at the bottom of the orange zone. So at this point, we want to see it stay above the 382 retracement, 38% retracement, and go back up. We don't want to see it break that 382 to go lower down. 618's down here at the blue shaded area. So that's the risk, right? That it breaks through the orange zone 382 and goes down to the 618, the blue zone. You know, if you take that out to the extent of the trend all the way down to the bottom here, oh, that's interesting too. You do find the 236 fib of the longest range, 3213. Again, bottom of the orange zone, 382 at the blue zone. So interesting enough, we do see some overlap of fib bottom of the orange zone and down here at the blue zone. If you draw it, let's do both of them at the same time, the longest trend and the shortest trend, you do see some overlap of Fibonacci right here at the bottom of the orange zone. So again, you don't want it to break that orange zone. And then you see an overlap of fib down here at the blue zone. So again, if it breaks the orange zone, we now have a clue that it could go to the blue zone and then the purple zone and then the green zone. So again, buying above here looks for higher. Underneath there, we look for it to go down for the pound dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.